Hello everyone, I'm Mike Gottlieb and I'm sitting here with Tom Freitag of Summit Funding, and we're just going to talk briefly about a couple of different financing programs and some of the ins and outs of them, and I'll let Tom kick it off here with just a brief introduction about yourself.
All right, so I have been in mortgage since 2006, and so I've been doing mortgage loans full-time since then. So that's 11 years in the business. I do enjoy helping people become homeowners, whether it's for the first time or perhaps upgrading their, selling their home and upgrading, or turning their home that they're moving out of into a rental and starting to become a property investor. So I enjoy a lot of different scenarios, and so that's it in a nutshell. I work for Summit Funding. Summit Funding is a mortgage bank. We have our own underwriters and we fund the loans, and we're able to get more transactions done. We can approve a lot of things that other lenders can't. So I'm very excited to be a part of Summit Funding as well.
All right, you've been there for how many years?
Well, since 2009.
2009, yeah. So I've been working for you for the bulk, or with you for the bulk of that time. And we've done a lot of transactions together. I can definitely testify to Tom and his team's capability. So just a brief summary of the three main types of financing that we use around here.
Well,
let's start with USDA, because we're in Cottage Grove, and that's right. the main method of financing down here.
Okay, so the USDA program is 100% financing. You don't have to do 100%. You can put a down payment, but it allows you to buy a house without putting a down payment. It's a 30-year fixed mortgage, very low mortgage insurance, so it's actually a great deal. So that payment is hard to beat. The only thing that beats a USDA loan would be a veterans loan, a VA loan. So USDA allows you to buy a home it has to be stick built, and it can be up to 5.0 acres as far as the home and the land. And the hardest part about the USDA loan is that it's conservative regarding how much of your income can go towards the house payment, and then how much of your income can go towards all your other credit obligations. But for a lot of people, it still works really nicely, and it also allows the seller to pay closing costs if the seller is willing.
Gotcha. And so you mentioned a little bit about the income and debt side. So if a person has a little bit more debt, and say their DTI, their debt to income level, is a little bit higher, is there a program that would be better for them than USDA?
Absolutely. The FHA loan allows a much more flexible debt to income ratio.
Okay.
Like, let's just say, in a simple answer, typically 10% more of their income can go towards either a house payment or other debts.
Okay, great. And so what are the kind of minimum requirements for FHA?
The minimum requirements would be a credit score down as low as 550. But if your credit score is that low, then you're going to have to do more down payment. Yeah. So normally, once you're at 580, then you can typically buy with the normal program of 3.5% down.
Gotcha. And so if somebody was maybe wanting to avoid some of the PMI, they had a little more money down, they didn't want to have as high of a payment and wanted to leverage their cash, what would the best financing product for them be in that situation?
Well, so if somebody had some down payment, it still comes down to the credit score. And for every 5% a person puts down, for example, if you put 10% down instead of 5%, then you have a reduced mortgage insurance with a conventional loan. Mm-hmm. So a conventional loan, once you hit 10% down, may be a better deal than an FHA loan.
Okay. And so with every additional 5%, you're getting a reduction in the PMI, which is all the way up to 20%, where you can avoid it entirely. Is that correct? So you can actually leverage yourself into a much lower payment if you have the down payment money and don't need to go FHA or USDA or one of those routes.
That's correct. However, the conventional loan is very punishing for lower credit scores. And so sometimes, I mean, in an extreme situation, if someone has a low credit score, even if they're going to put 50% down, an FHA loan might be the winner.
Gotcha, gotcha. And so, mentioned briefly the VA, another 100% financing. I am an MRP, a military relocation professional, and we've done a lot of VA loans together for happy clients. So why don't we talk a little bit about VA financing?
Okay. VA is awesome. It allows the veteran to buy a home with 100% financing, so no down payment required. Again, if you want to, you can put a down payment down, but the program is designed for someone that's not needing to put a down payment. Seller can pay all the closing costs as well. And one of the things that's great about the VA loan, normally when you buy a house without 20% down, you have monthly mortgage insurance, and that's required on conventional FHA and USDA, but the VA loan has no monthly mortgage insurance. A one-time fee that covers it. And so typically the VA loan is going to be the lowest payment. If someone were eligible for the VA loan and comparing all the options, the VA loan typically, not every single time, but almost every time wins. And so the other thing with the VA loan is that you can buy stick-built or manufactured home. And what's nice to the veteran is that the home can't be in a state of disrepair, like no major deferred maintenance. It has to be fixed either before the loan closes or after closing very quickly.
And one of the methods of closing and then doing the repairs would be a holdback. Now, a lot of lenders don't do holdbacks. Buyers might not understand the importance of that, but Summit Funding does allow holdbacks. Is that correct?
That's correct. We call it an escrow holdback. Now, here's the cool thing right off the top. So normally an escrow company would hold those funds and they charge $100 to $150 to do it. But Summit Funding holds the money in this case. We actually do our own escrow holdback, and we don't charge a single dollar to the borrower for the escrow holdback. So what happens is someone wants to buy a house, it needs a repair, let's just say simply a roof. There's so many other things you could do with an escrow holdback, but let's just say a roof, $10,000 for the roof, and so the seller doesn't want to do the work because they don't know, if the loan's going to close. Sure. But they agree that if they sell the home for a certain price, that they'll pay for the roof. So then the money that was allocated for the roof, when the loan closes, $10,000 is held back from the seller's proceeds. It's held then by Summit Funding. The roof gets done, and then the contractor gets paid after closing.
Gotcha. We briefly talked about the funding fee on a VA loan. Isn't there a waiver for a VA borrower who has a certain percentage of disability on the funding fee?
Absolutely. In fact, if you're a disabled veteran, even the lowest percentage is 10%. Even if you're 10% disabled, your VA funding fee is waived. And normally for your first use, that's just over 2%. And if you've used the VA loan once and you're going to use it again, that's over 3% of the loan amount that you would be paying a fee, and you don't have to pay it if you're a disabled vet.
And speaking of disabled vets, there's also different programs that we can point them towards for getting reasonable accommodation and modification to the home that they buy through grants if they have a certain rating of disability as well. Is that correct? That's
correct. I believe you have to be 100% or very close to 100% disabled, and it is a special adaptive housing program. It allows you to make changes to the door size, change the flooring, make things very, for example, the bathroom, you can put in a lot of amenities, grab bars and things for depending upon the disability of the veteran.
All right. Well, I thank you very much, Tom, for talking about these different kinds of financing. Again, Tom Freitag with Summit Funding. You can reach him at 541-868-1855 or at Team Freitag, and that's Freitag @summitfunding.net.